Value creation only happens when all of these stakeholder groups are rowing in the same direction.
This is why you should watch and listen to Season 2 of Critical Moments to understand what is changing in the age of AI and how is go-to-market evolving in 2026 and beyond.
I spent 4 years building private equity value creation practice at Meru, which is a small boutique private equity advisory firm. At Meru, I took on executive roles and I led multiple turnarounds for private equity-backed portfolio companies, mostly in the middle market space in the US. Now, my foundation is in strategy and finance. I spent multiple years at McKinsey and Company, as well as JP Morgan's investment banking. So if I look back at my career, each of these roles has prepared me for what I do today. I've sat in multiple chairs, the capital side, the strategy side, now fully embedded in the operating seat. So I kind of understand what different stakeholders need at the table. So whether it's the investment teams, the management teams, the board. And I think that really helps me build trust with each of these stakeholders, which is super important, as you know, in the private equity space, is building that trust, getting that alignment across different stakeholder groups. And value creation only happens when all of these stakeholder groups are rowing in the same direction. So excited to be here and, looking forward to this conversation.
Yeah, that's awesome. And thank you for the intro. That's incredible. And yeah, your background is amazing. I guess when you look back on those different roles that you've sat on, what one do you think has been the most informative to the independent operating partner that you are today, whether it's McKinsey or JP Morgan or in the larger funds, the smaller advisory? Where do you think, that was the role that really got me ready for it?
Honestly, I think it was my role at Meru. The large companies are great training grounds, but they don't teach you to be an entrepreneur. So when I joined Meru, it was about less than 10 employees. They were just starting out. So going from McKinsey to a startup, when the value creation, PE value creation space was very nascent, was a risk I took in my career, but it was a risk worth taking. To be very honest, it was a very humbling experience because before that, I'd only worked at elite institutions and you were kind of hiding behind a brand. No one is really buying Samiksha's services. People are buying JP Morgan or McKinsey or, I got my MBA from Wharton and those are brands, but no one's looking at you. So at Meru, it was humbling because it's you. You have no brand name to hide behind. And when you walk into a company or a PE fund, people are buying you, your name and what you bring to the table. So while it was very humbling, I also learned a lot about taking risks and building my own entrepreneurial journey. And I think if I hadn't taken that risk, I wouldn't have been successful building the value creation function at Mubadala. And after Mubadala, I wouldn't have had the confidence to go on my own and become an independent. So I truly credit the Meru guys more than anything else for building up my confidence that I can take that entrepreneurial step.
Yeah, that's great. I guess one question that always comes to mind is when you've been somewhere like McKinsey and then moving from the kind of consultant model to actually being an operator, how challenging was that? I mean, I know you said that was obviously super informative with what you went through, but just how hard was that on a scale of 1 to 10 to make that transition and be like, oh my goodness, I'm actually running this business in comparison to being an external partner, external consultant that is on a retainer or a large contract? Like that feels like it must have been quite a big thing to go through.
It was humbling. I think that's like the one word I use to describe that experience is humbling because, to be honest, places like JP Morgan and McKinsey, they're institutions in themselves. They recruit from top tier schools and, you're working with the creme de la creme. But when we were starting out at Meru, we didn't have that luxury. So, you kind of learn that talent can be found in many places. You don't have to go to Ivy League to be talented. And, my very first company I worked with is a very small company in Kennesaw, Georgia. Super tiny. People don't even know where that is on the map, but very talented people working at that small company. And you learn that, people can come in all, like talent comes in all shapes and sizes. So that's why I call it very humbling. I think I've learned to respect everyone regardless of their credentials. And I think that's the learning I needed to have that point in my career. So yeah, I would say it was very humbling. It was very difficult, because you think you know a lot, but there's so much you don't know and you have to learn by doing. And I think people who were able to be successful in something like that is you have to check your ego at the door. So if you walk in with this mindset of, I know everything, I'm better than everyone, like you're not going to make too much progress. You're not going to get too far.
Totally. And how big did Meru get? Like, what kind of scale did they get to? I know you said you joined.
Yeah, they're about 80 full-time people today. So I'm very excited to see their progress and see the company thriving. I certainly feel like I was a big part of their early stage journey when it was just a baby. So, after 8-9 years, they're up to 80 people, which is phenomenal.
Amazing. That's great. Now, obviously, when we spoke before, I think it became quite clear that you are a hands-on operator, somebody that embeds himself as part of the management team of these companies that you work with, which obviously come at kind of various size and scale. To you, like, what does skin in the game look like at that scale for large businesses? And how does such deep alignment drive both your personal accountability and organizational success, and ultimately for the PE fund, like the return on investment they're ultimately looking for?
We should first talk about what skin in the game means. I think everyone interprets it differently. So for me personally, skin in the game means shared accountability for outcomes, both the upside as well as the risks. I think I shouldn't say most. I think many people are good at pontificating and advising. Very few people are willing to roll up their sleeves and work alongside the management teams. And I think that's really the difference between having skin in the game. So if you show up with the management and they see that you're carrying the risk alongside them, then the conversation shifts from advisor to that of a true partnership. In my most recent role at Mubadala, my personal OKRs were tied to the portfolio company KPIs. So those decisions carried real consequences for me personally as well. There was no separation between advisor and management. And that level of alignment changes behavior. It builds trust quickly, and it leads to better execution. If you don't have that trust, then you're not going to be able to drive change. And without change, you're not going to be able to capture the value creation plans that you set out to achieve. Like trust, credibility, relationship building, I think those are all very critical. If anyone's trying to embed themselves with the management team of a portfolio company, those are building blocks, and getting that right incentive plan in place is super important for you to have a skin in the game. I think I've seen many PE funds have this model of almost a consultant-based model where it's a transaction, come do this project for me, and that's it. That builds it's very transactional. You have to have an end-to-end view as an operating partner. Otherwise, you're just an in-house consultant providing a service.
Yeah. And like help the audience like understand that the time commitment, like when your OKRs are tied directly to the portfolio KPIs, are you in there full time? Is it part time? Like, how do you manage that pressure? Because can you give us a bit of view of the scale of some of these businesses? Is it hundreds of millions? Is it billions? Like where are you sat in these types of companies?
Yeah, I think for me, there was an exception because I think one of my portfolio companies is probably equivalent to many people's 4 portcos. So it was a public company, about $20 billion in market cap. So you can imagine the scale of the business and working alongside the CEO and the rest of the C-suite for a lot of these initiatives. So in PE, you don't see portcos of that magnitude easily. But yeah, if somebody's KPIs are tied, I mean, I was spending 99% of my time with them. And then Everything else I used to call my extracurricular activities. But, I joke, but the point is that alignment, people need to see you. If you're only showing up once a week or once a month, you're an afterthought. So for you to be truly a partner, a skin in the game, you have to make the effort to show up. So my cadence was New York 1 week, Texas 1 week, California 1 week, just following along the company's management and, being present. And so no matter which office I went to or visited, I was never an outsider. I was part of the team. And I think that takes effort and that takes a bit of a mindset shift.
Over months or years? What kind of timeline are we working?
Yeah, this is over a couple of years, but that's how I started. When I didn't know anyone and I was trying to build relationships, I didn't care who I was meeting. I would just show up to the office, walk the halls, and happy to have coffee with anyone who was willing to have a conversation with me. So I built relationships all the way from the company's CEO down to like their managers and analysts. Everyone got to know me, and that's the thing, right? In the beginning, when you're trying to build a relationship, it's more important to get to know everyone. Walking the halls is very underrated, but it's such an effective technique to really build a rapport. So if you don't know the answer to a question, you know who to call within the company to get your questions answered. And that's a skill that you can't read in a book.
Yeah, 100%. And did you feel the pressure? Like, was that an environment, like, what was the magnitude of the pressure? If again, going back to that kind of OKR and the KPIs, like, how pressurized an environment was that, or is that for an operating partner from your perspective?
I think, so I'm a person who thrives in challenges and ambiguity. I should lead with that. I know it's a certain type of personality that enjoys that. So I am not one to shy away from a chaotic situation. My prior experience, whether it was at McKinsey, JP Morgan, and even at Meru, like I was so used to walking into chaos. I thrive on chaos. So I know there's more to do and that gets me excited. So for me, pressure never came from the magnitude of work or the problem we're trying to solve. I think for us, it's probably unique challenges. The larger a company gets, the slower moving it is to change, adaptation. I work with smaller companies in the middle market, less than, call it $500 million in revenue. Those companies, because they're smaller, the decision is faster. As a result, the impact is faster. So you can see things changing rapidly, but in larger companies, it's much harder to do. So I wouldn't call frustration is probably not the right word here to think about, but it's not as fast-paced as you would like it to be because there's a lot of things that have to come together for large companies. So for me, to go back to answer your question, it was less about, the scale or the magnitude of the work. It was just delivering it, the slow pace of the change and everything that you have to go through to get that going for a large company.
Yeah. Yeah. I mean, it kind of leads on perfectly to my next question, which is, across those different environments that you've just mentioned, what would you say are the leadership or the diagnostic or the tactical skills that you can carry across versus those that are just very different, or do you see them all the same? Like, how would you sum up your approach to those different environments?
I think the toolkit is transferable. That's one beauty of being in our seat is you build that strong toolkit that you can apply in many, many different situations. The things we've talking about, the stakeholder management, communication, relationship building, pattern recognition, those are all transferable no matter the size of the business or even the industry that they're operating in. I think what changes is context. So as we talked about, for public companies, there's more scrutiny. You have quarterly earnings targets to meet. You have Wall Street analysts that are reviewing the business performance. And then obviously you've got the share price showing you the mirror every single day. That's one. And then on the smaller companies, more private companies, you don't have that external scrutiny, but maybe you have less resources, you have less budget, not as many people, but you don't also have to cross as many hurdles to get things done, to get decisions moving. So you may actually have faster decision loop, faster feedback loop, so things can move at a faster pace. So yeah, I think context changes, but that core toolkit, the foundation, is very transferable.
Yeah. Okay. Interesting. And you know, you've talked there about some of the transferable skills. Like, do you believe in go-to-market playbooks across those different contexts? Like, from your experience, like, where do they work well? Where does your judgment and adaptation become absolutely key to the overall success? Like, yeah, what's your view on playbooks maybe as a starting point? Are they useful?
I know people love playbooks, so I'm going to answer this question in a slightly diplomatic way. I think playbooks are a good foundation to have. I think the playbooks can be helpful in perhaps diagnosing a situation when you're doing like quick diligence on something and that you're trying to identify where the value levers are. I don't think playbooks, especially on go-to-market, are scalable. What I mean by that is, let's use pricing. It's such an easy example to follow. Everyone understands pricing. Just because you set up pricing one way for one company, you cannot scale that across multiple portfolio companies because the industry context matters. How a software company makes pricing decisions is very different from a hardware company will make pricing decisions, very different from how a distributor will make pricing decisions. So that's what I mean by go-to-market playbooks are not scalable. At some point, context and judgment becomes more important. Yeah. Even within the same industry, I've worked, my background is a lot in semiconductors. I was in the semiconductor practice at McKinsey, and I've worked with a lot of different semi companies, and I can tell you from that experience, it was not one size fits all. The context matters. Each company has a different set of customers. Their go-to-market motion is very different. So the playbook can help you identify like pattern recognition, gives you a good solid foundation, but it's not scalable. So a good operating partner would know how far to take the playbook and when the judgment kicks in and use that judgment to actually execute and scale the impact from go-to-market. Anyone who's solely relying on a playbook approach for go-to-market is probably being short-sighted. I've never walked into a CEO's office and heard them say, oh yeah, bring me a go-to-market playbook so I can improve my revenue. Like, if you walk into a CEO's office offering them a playbook on how to change their revenue, you will be shown the door right away because every single CEO will tell you that their company is very unique, everything's super nuanced, and the regular playbook doesn't apply to them. So if you walk in with a playbook mindset, you will be shown the door right away.
Yeah, love it. And tell the audience in regards to the work that you've done over the last few years, like what percentage of the engagements have been turnaround environments versus trying to hit increased goals because performance has been great? Like where's your time typically spent on those two types of extremes?
It's a mixed bag. So, in the last 5 years, you have to keep in mind there was the pandemic and COVID. So at the peak of the pandemic, we were certainly seeing some turnaround situations. And sometimes turnarounds, it's a scary word for people. And it doesn't always mean that you're heading to a bankruptcy per se. Sometimes the turnaround may be you're just facing headwinds and you may not have had the right management steering the ship. So you need someone to come in and kind of stabilize the situation and turn it around. So there's flavors of turnaround, I would say. The last thing I would say is for people like me, we're not called in, we're not invited when things are going well. So there's probably some bias there too, that we only see the bad situation. We used to joke back in my consulting days is every company we work with, they have such terrible data. What are they doing wrong? And, some introspection, we realize those are the situations we see. The companies that are doing great don't call us. It's the companies that are struggling that call us. So maybe it's a little bit of a nature of the trade, you could say. So I've never walked into a company where everything was perfect, and I think that might be just by design.
Fine. So in those environments then, when there is challenge and there is maybe additional internal pressure, and they've got the PE fund or whoever the investor is that is bringing in the team like you, how do you avoid the skepticism of being the outside advisor or the outside operating partner? Like, how are you building trust? Like, I know you said you want to be on the ground and be with people, but maybe beyond that, or some practical examples, because there'll be operating partners listening that are maybe facing some of those challenges where it's like seen as us and them. What would be your advice to like build that trust and not be seen as an outside advisor beyond what we spoke about earlier, which was, being present and being committed and aligned on goals? Is there any other kind of practical tips you can give to the audience on that?
Yeah, I think I also, I think our job comes with a deep sense of responsibility. When I walk into a room, especially early days when everyone's trying to get to know each other, I didn't realize how stressful it is for management teams. I appreciate it now. So it's kind of upon us, like we have to walk in with a deep sense of responsibility, professionalism. We have to remember that livelihoods are at stake. Just recently, I met a new management team, and the first thing the CEO told me is like, I'm very worried that this is going to create a lot of rumors within the company and my good people may already leave. And we're not even doing anything. We're just doing a diligence as part of a regular M&A process. So, when I hear those things, and I've heard that over and over in my career, and it has helped me refine my sense of responsibility. So I think just keeping that in mind, that there are real people behind the numbers. And for us, it may be just another company, but for these guys, it's their day-to-day livelihoods is super important. So it requires a little bit of adjustment in mindset, composure, and, a good sense of judgment on what to say, where to say. Being very respectful is very important. I've certainly seen people that think they're know-it-all, and that doesn't work. If you're trying to build bridges, you have to be respectful. The last thing I would say is like, listen for cues, listen for what people are saying. I think listening is another underrated, trait of people, operating partners. Is listening is underrated. I wish more people would spend time listening and less time talking. I think you can pick up on a lot of cues, not just in what people are saying, but also what people are not saying. And you can learn a lot and extrapolate and then tailor your approach accordingly.
Yeah.
I mean, at the end of the day, you have like lead with empathy is super important. On the Myers-Briggs test, I'm the strong F, so maybe the empathy comes naturally to me, which is probably missing in a lot of the boardrooms that that I've sat in. But yeah, that empathy, carry that on. Like, think of yourself as a human, the other person as a human. That human to human connection can never fail you.
Yeah. Yeah, I love it. And just on the example you gave there, when the CEO says to you, hey, like, I am worried that this is going to be the perception, what was your advice? How did you avoid that? Because I'm sure many people have been through that, even just knowing the investors in the room or the investors in the office. Yeah. It's like, have we done something wrong? Are we out of cash? What's your approach to supporting that CEO in that instance? What did you turn around and say to do?
Yeah, I mean, the first thing you do is you work with the management on their talking points that they can because if I could, I would go talk to every single person in the company. That's not possible. So the next best thing you can do is help them think about a story to tell, their talking points that kind of assuages those concerns and allays those fears. So I think that's very important. In this particular instance, we actually went for dinner with a few people at the company so they could kind of see like we're normal, having very normal conversations. I understand that's not always possible in every situation. So having your story straight and helping your management teams cascade down that story is super important to give people comfort that, you're not here to cut heads. And I think PE probably gets the wrong headlines. If you pick up the newspaper, it's like, oh, all these job cuts. And it's not always that. Sometimes people are generally just trying to understand the business and how to grow a business. Sometimes you have to scale down to scale up. I certainly understand that. But yeah, it's very important to align on a communication plan up front so that no one says anything that creates unnecessary fear amongst the employee group.
Yeah. And I think some of the conversations I've had with other operating partners is being open and intentional with your communication is better than allowing narratives to fester, because they can get dangerous very, very quickly, that people come up with their own hypotheses, and just being clear and open is often very important, because quite regularly people actually dig in and deliver more because they understand the context of maybe where the business is at and what they're trying to achieve.
100% agree. The context matters with the team, and being intentional about the communication, as you said, is paramount.
Yeah. So I guess when we spoke previously, you mentioned that often in your journey as an operating partner and as an executive within these businesses, that often you found yourself as the only woman in the room. How have you navigated some of those gender dynamics in private equity and within the circles that you're ultimately operating within? And what advice do you have to those that are looking to follow a similar path? And I guess how did you end up being the only female in the room? I would love if you can open up to the audience on that.
Yeah, that's a great question, Stuart. I would say, if I reflect back on my career, I think getting into the room is the hardest part, personally, if I reflect on my own journey. It hasn't been easy. I wouldn't sugarcoat it. I think getting into the room is the hardest part. Once you're in the room, I think your experience, your judgment kind of speaks for itself. And as soon as you establish that credibility, like, no one's looking at your gender at that point, because people know they can trust you. They know what you bring to the table. But it's getting into the room that I've found has been the hardest part. And yeah, I mean, from an advice standpoint, I wish it was as simple as apply for jobs and get in. I know it's not. And, if I'm being very candid, I know I've changed the course of some decisions in the past that wouldn't have happened if I was not in the room, right? Like, the conversation I've never shifted to things that I can pick on that maybe perhaps an all-male team wouldn't pick up on. So all of that to say, keep trying, don't be demotivated. Maybe look out for other senior women. And I say that with a little hesitation because there are not a lot of senior women. And I mean, I've usually been the senior most woman in the room, and in most of my career. That says a lot, even in my 20s and my 30s. So that says a lot. So now, where I am, obviously the type of rooms have changed. I'm still the senior most woman in the room. So that says a lot. I mean, I'm always open to pay it forward. Excuse me. I've had people support me, reach out over the years, and men maybe perhaps not always appreciate the challenges you go through because they haven't lived your life, right? And that's okay. They haven't lived your life, but I think you can educate. And I think there are some allies who are willing to listen. And I've had those experiences of, a perfect example of someone told me once, oh, you are not, you don't come across to me as someone who can get things done. And, my counter was, yes, I'm not going to start yelling at a CEO to get things done because that's not who I am, but my influencing technique will get the outcome we want. It just wouldn't involve yelling and screaming at someone. So those are the things. Sometimes people just look at you and they have, their unconscious bias, but know that align on outcome, our approach might be different. So all of this to say, Getting into the room is the hardest part. There are a lot of exceptionally talented women waiting for their turn. I think they just need someone to take that bet on them that you have what it takes, even though your approach may not always align. Keep faith, keep networking. You have what it takes. And once you're in the room, you can hopefully open the doors for other women. I think that's really what I can say here.
Yeah, no, I appreciate you opening up about that. And I know it's something that you're personally, really open to supporting other females or women on their journey. And for anybody that is listening, Samiksha's LinkedIn is in the description, so feel free to connect there. But yeah, I think it's an important conversation to have, and it's not just within operating partner networks. We know that's the same across the C-suite in general. So yeah, really appreciate you opening up on that. I guess moving lanes a little bit into something which is on everybody's mind, which is good old AI. And in particular, the influence that it has on go-to-market. We've had previous guests talk about the impact on playbooks, and you've mentioned kind of your view on them. And I think for a lot of the funds we're meeting, they have this itch of, should they be doing more with AI? Should they be more drastic in ripping out teams and replacing everybody with the machine? I guess, do you see it as being overhyped, or do you think that there really is an opportunity to accelerate operational improvements and the speed of some of these turnarounds by leveraging it? And what would be the particular use cases that you're particularly excited about, if you were to share some?
Yeah, I think I'm very excited about advent of AI and actually applying and deploying AI throughout businesses. Are we there yet? No. Do we know how to apply it, especially in a go-to-market setup? No. If I'm being very honest, I think, if you read the news, or if you if you talk to your peer in the Silicon Valley, they would tell you AI is replacing everyone yesterday, and, Claude or ChatGPT can do all our jobs. But if I'm being very practical and honest, especially on the go-to-market side, I see AI right now as a productivity booster based on the use cases I have seen. So, for example, if there is some manual tasks, especially on the sales side, call notes, logging those call notes into the CRM, synthesizing the notes, setting up follow-ups. That's what I think of as productivity gains, where you can use the right AI agents to do a lot of that. And I think a lot of CRMs are now offering that capability. Now, when it comes to decision making, and especially on the enterprise sales, the B2B sales is, it's a high touch motion. People are not doling out millions of dollars in sales contracts to AI agents, at least not that I'm aware of. That you still need that human to human connection to be able to do that. So if we think that AI will, bring customers and generate hundreds of millions of dollars of revenue, I don't think we're there yet. And maybe there's a use case down the road in the future. I don't see that right now. I think the other use case that could be very interesting for AI is dynamic pricing. And we're seeing that in many instances. My favorite one is driving down the highways here in the United States. The toll on a regular day is like $2. Yeah, you drive in Seattle on Monday morning, 8 a.m. It's like $15. So that's like a great, the AI dynamic pricing, depending on the amount of traffic on the road, they adjust the toll amount and it goes higher and higher. I've seen it as high as like $30, depending on, how busy the road is. So I think that's a great use case. But I haven't seen it fully deployed at scale in a lot of businesses. I think the companies that can crack that code will probably have a first mover advantage if they can figure out how to make their pricing predictive of, learn from the past and inform your future decision. That training will require some data, not just data. It will actually also require the thinking around the framework and the criteria, but we're not there yet. And I work in what I call, maybe not sleepy industries, but these are like very like traditional industrials asset heavy companies, they're not the first adopters of new technology. They're often the slow movers. So, before this whole AI adoption even gets to those companies, it's going to be a journey. It's not going to be an overnight change. AI adoption requires money, requires talent, requires time, which a lot of companies don't have. So for them to fully adopt it's a long ways away. So I think AI is going to have, to sum up, like AI is going to have important productivity gains in the short term that can be quickly deployed. I see that as a low-hanging fruit. But for every company to be like, at the frontier of AI, we're definitely years away from achieving that.
Yes, great insights. Look, I think one of the final questions I have is that we hear from many of the listeners that they are trying to become operating partners, but they're struggling to break in. And I think the bar continues to be pushed higher and higher on what a great operating partner means and what that characteristic looks like from an individual. What advice can you offer to candidates out there beyond the usual networking advice that maybe exists? Like how do you speak into it, and how do you get the opportunity as a starting point?
I think that's an important question, Stuart. This operating partner space, I describe it as almost like a black box. When I am trying to recruit or hire, I can never find the good talent to interview. And, and I hear so much on the other side from the candidates, there's so much talent out there and they cannot find the right opportunities. So clearly there is a mismatch between supply and demand, and the talent and the hiring managers are just not able to find each other. That aside, there is definitely, in the last decade, I've seen an explosion of demand and supply. What has become very important, the way this space has evolved. So when I started out in this space about 8-9 years ago, it was very nascent. There was not, operating partners where most private equity funds that I spoke to didn't really understand the operating partner concept. It was very nebulous. There were very few shops that had an established function. Now it's almost table stakes. If you look at forget large cap, even middle market funds have dedicated in-house operating teams, which I think is a phenomenal step. What that has done is people are not solving for generalists, jack of all trades. People are solving for someone who has a very clearly defined value proposition. So for example, for me, it's commercial excellence, go to market for industrials, technology, tech-enabled businesses, right? So if you can't say that in 2 words, most people you talk to want to help them help you. Help them place you in a box. So even if they don't have an opportunity for you right away, if something that aligns to your value proposition comes through their network, they can place you. If you're a generalist who can do everything, then you end up in this long list of people who can do everything, and then you get buried to the bottom. So figure out what your USP is. Stick to that USP. And, sometimes, I talk to a lot of people that reach out to me. I'm happy to, like I said, I love sharing and paying it forward. So sometimes people ask me, okay, what's in trend? And, where do you see demand? Maybe that's my USP. That's not how it works. You have to know what you're passionate about. So if you are passionate about healthcare and you end up working in oil and gas, that's not a good synergy. You're never going to enjoy that. You're never going to be passionate about it. Like, you have to figure out what are you passionate about and just build on that. Make that your USP. Target funds and companies that operate in that space. I personally think that generalist model is not scalable. Maybe for early career people who are still like pre-MBA, right out of MBA, but as you mature and progress in your career, I think it's important to have your USP. Use that USP to filter out the funds and companies you want to target and build your platform around it. Without a platform, it's going to be even a tougher battle to follow.
Yeah, I think the way we describe it internally is you want to be something to someone rather than
Yes.
nothing to anyone, you know, and it's just like, it's that whole thing about what is your edge, what is your superpower, and becoming known for it. And on one of the conversations we had on the podcast, the feedback was that not all ARR is treated the same, meaning that, you know, random contracts actually have an impact on what the value of the ARR that you hold ultimately is, and it can make you make wrong decisions. And I think the same applies for, you know, what you spoke about with operating partners. It's like not all work that you do is treated equal. If you've got your niche and you nail that and you become known, as it sounds like you have within your area of specialism, then that legacy is really worth something quite powerful for the next time that role comes up, whether it's in a different state or whether it's in a different country. If you're known for that, I think that's the holy grail, which is really cool. And I guess, like, finally for you, like, what's on the horizon over the coming months and years? Like, it sounds like you've done a ton already. What are you looking for? What are you excited about? And what's next for you in your career?
Yeah, look, I'm enjoying this independent operating gig. I think what I've realized in the last few years is I love working with companies. I love solving complex problems, and I love seeing, you know, my work in action and living with the consequences. So I want to continue doing that. I have really enjoyed this journey over the last, call it, decade or so. So I want to continue doing that, either at the fund level or at the portfolio company level, as long as I'm doing meaningful work where you can see impact and value creation at the end of the day. So I plan on continuing being in this operating partner space. This is kind of the Kool-Aid I've drank. I know what I bring to the table, and I know what I can, where I can add value. So I plan on continuing building on this.
That's awesome. Well, look, I've really enjoyed the conversation, and thank you so much for all of your insights and the great context. I think the audience will have learned a ton. And as I said, your contact details will be in the description for anybody that does want to connect with you. And yeah, thank you again for joining the conversation. It's been an absolute pleasure.
Thank you, Stuart. Likewise, appreciate you setting it up. I've learned a lot as well. And, you know, this is a topic I'm very passionate about. So if anyone who's listening or watching wants to continue this conversation, exchange ideas, compare notes, whether you're at a fund, whether you're trying to break in, or at a portfolio company, I would love to, you know, compare notes and connect. Feel free to reach out to me via LinkedIn. And as Stuart said, my LinkedIn's connected here. So I look forward to carrying on the conversation.
Amazing. Thank you so much. And thank you, everybody, for listening.